All right, welcome to today's explainer. We're going to jump right in and completely shatter a pretty common illusion, the illusion of perfect accounting. It's super easy to look at a polished set of financial statements and just assume everything was calculated flawlessly on the very first try. But behind the scenes, well, it can sometimes look like a crime scene of mismatched numbers and missing funds. So in this explainer, we're going to put on our detective hats. We are going to become financial detectives, and I'll show you exactly how accountants track down these discrepancies, solve the mystery of the unbalanced book, and ultimately restore order to a company's financial universe.
So here's our roadmap for today. We're looking at 1. The anatomy of accounting errors, 2. The suspense account holding cell, 3. Bank reconciliations explained, 4. Reconciling accounts payable, and 5. Fixing the financial statements.
Okay, part 1, the anatomy of accounting errors, or when the trial balance fails.
Now, you might think the trial balance is an ironclad defense to make sure debits perfectly equal credits. But actually, it's kind of far from foolproof. We basically have two types of financial crimes here. First, you've got the clumsy errors. These are the mistakes that just completely break the math and trigger the alarms right away, like totaling a book incorrectly, posting to only one side of the ledger, or, entering a debit as a credit. But then we have the stealthy errors. These guys completely bypass our defenses. If you just flat out omit a transaction, literally an error of omission, well, the math still balances. Or if you commit an error of principle, like recording the purchase of a huge piece of heavy machinery as just a routine repair expense, you've still recorded a debit and a credit. The math works, the balance checks out, but the actual reality of the company's financial health, it's completely distorted.
Which brings us to part 2, the suspense account holding cell, detaining mismatched numbers.
So picture this. You're closing the books for the month, the clock is absolutely ticking to publish the reports, and there's a gap. The debits and the credits just will not match. You're off by, say, $500. What do? Does the whole system just freeze up? Well, no. Accounting actually has a built-in emergency failsafe for this exact mystery. Enter the suspense account. Think of this as our financial evidence locker. It's a temporary holding bay where we plug that unexplained difference, which artificially forces the trial balance to agree. And this is crucial because it keeps the whole broader accounting machine running while we, the financial detectives, take the time we need to thoroughly investigate the discrepancy, track down the missing numbers, and clear that account right back to zero. So what kind of specific issues actually land a discrepancy directly into this holding cell? Well, it's mostly those clumsy errors we touched on a minute ago. Things like single entry errors where, someone recorded a purchase but completely forgot to log the cash actually leaving the bank. Or maybe posting a $1,000 debit but only a $100 credit. Simple addition errors in the ledgers, balancing off errors, or just posting an entry to the totally wrong side. These are the chaotic, one-sided mistakes that just sit in the suspense account, waiting for us to trace them back to where they started.
All right, part 3, bank reconciliations explained, the outside witness.
At this point in our investigation, we gotta shift gears. We can't solve everything just by staring at our own notebooks. We really need an outside witness, because the harsh truth is, we can never entirely trust our internal records in total isolation. Our cash ledger tells us what we think we have, but the bank statement, that's the actual hard reality sitting in the vault. So a bank reconciliation formally explains that gap between our internal story and the bank story. It helps us catch hidden things we might not know about, like sudden bank fees or interest income. But it also helps us detect really serious issues, like unauthorized withdrawals, or worst case scenario, outright fraud.
To figure this out, we follow a super strict 3-step procedure. Step 1, we adjust the bank's balance. So we add deposits we've made that the bank just hasn't processed yet, and we subtract checks we've written that haven't actually been cashed. Then step 2, we adjust our own internal general ledger balance. We add in unrecorded receipts, like electronic transfers we literally just found out about, and we subtract any bank charges we were just hit with. And finally, step 3. After both sides have been updated with those missing puzzle pieces, the two adjusted balances absolutely positively must equal each other. If they don't, well, the investigation continues.
Moving on to part 4, reconciling accounts payable or cross-examining our suppliers. Okay, so we've investigated the money we have, right? Now we have to investigate the money we owe. When our internal liability records clash with what our suppliers are claiming we owe them, we have to go looking for the usual suspects. Let's say we get a statement demanding $10,000, but our books say we only owe $8,000. Why the disconnect? Usually it's unpresented invoices. Maybe the warehouse got the goods, but the invoice just never made it over to the accounting desk. Or maybe we sent a payment that hasn't been logged properly.
Sometimes someone just accidentally enters the same invoice twice, a totally duplicate posting. Or even wilder, we recorded a payment to supplier A but accidentally logged it under supplier B's account. Reconciling accounts payable is absolutely vital to make sure we don't pay for things twice, and it keeps our relationships with vendors strong and dispute-free. Now, I want to share a really fascinating insider detective trick with you. The number 9. If you're reconciling your accounts and you find an unexplained difference, check to see if that exact difference is cleanly divisible by 9. If it is, you are almost certainly looking at a transposition error. That's what happens when a human being accidentally swaps 2 digits. So for example, if you write down an invoice as $1,560 instead of the correct $1,650, the difference is exactly $90, and 90 is perfectly divisible by 9. It's this brilliant mathematical shortcut that immediately tells you to stop looking for a missing $90 receipt and just start looking for flipped digits.
All right, part 5, fixing the financial statements and closing the case.
It's time to bring this investigation to a close. Empty out that suspense account and prepare the final correcting journal entries. But as we do this, we absolutely have to remember the ultimate golden rule of accounting. Any error that affects the statement of profit or loss will absolutely also affect the statement of financial position. Basically, this proves that a single uncorrected error doesn't just sit there in isolation. It creates this massive ripple effect that distorts the entire value of the company, effectively transferring incorrect profit figures directly into the retained earnings on the balance sheet.
So, leaving these cases unsolved has incredibly real consequences. Let's say we accidentally overstate an expense. Maybe we double counted a repair bill. Well, we've artificially understated our profit. And because our profit looks lower than it actually is, our overall company equity is also understated. On the flip side, if we completely leave out an expense, our profit gets artificially inflated, making the company look way more valuable than it truly is. Correcting these errors isn't just about making the math look pretty on paper. It's about uncovering the objective, absolute truth of a business's real financial standing.
Which leaves us with this final thought to chew on. We have seen how the financial detective works, right? We know how the suspense account holds those clumsy mistakes, and how external reconciliations shine a light on the blind spots. But remember those stealthy errors we talked about at the very beginning? The ones that balance perfectly. If your trial balance perfectly matched today, down to the exact penny, what stealthy, completely undetected errors could still be quietly hiding in your company's books right now? A mathematically balanced book doesn't guarantee a truthful book, so keep your detective hat nearby. Thanks for joining me on this explainer, and keep questioning those numbers.